Ryan Cohen is a man of mystery. I've never met him. I don't believe I've ever even heard him speak.
He doesn't like to show any more cards than he has to.
He's a contrarian, independent thinking, independent-minded leader.
30-something entrepreneur who essentially took Amazon on successfully and built out Chewy to the great company that is today.
Somebody without a college degree can become the chairman of a public company of the scale of GameStop.
Came upon newfound fame by being the meme stock king, by being the Pied Piper of Wall Street.
And the biggest winner is Ryan Cohen.
Ryan Cohen saw dollar signs instead of doom.
Where's Ryan Cohen when I need him?
He's accumulated fans and almost like a cult-like following.
My understanding is the Reddit community generally loves Ryan Cohen, hence the moniker Papa Cohen.
You'll see these guys reacting to these tweets like they're secret codes.
In terms of him being a meme lord, I don't know. If I was Ryan Cohen, I wouldn't want that to be my claim to fame.
Ryan Cohen's stake in Bed Bath & Beyond, he's now cashed out of his entire position.
Bed Bath & Beyond shares cratering 40%. Should you expect the SEC to get involved?
Seems like Ryan Cohen is kind of using people to make money.
Every story needs a hero or a villain. Ryan very much filled that role.
People know Ryan Cohen now probably because of his role in the GameStop run-up.
His investment of $76 million, now worth over $2 billion.
But before all of this, he was an entrepreneur. Ryan Cohen, though, himself is a little bit of an enigma.
He's very, very mysterious. You know, I've spoken to him and I'll ask him where he is and he won't tell me.
He really just stays out of the press and he does his thing.
There's times where he's open and likes to make noise like you see on Twitter, and there's times in which he really withdraws.
I think mysterious and elusive are spot on. So let people fill in the blanks and make their own assumptions.
He grew up here in Montreal. His past shows that he thought a bit differently right from the beginning of adulthood.
I started my first business when I was 13 or 14 years old, building websites online.
Whenever Ryan talks about his early years, the first thing that he brings up is his relationship with his father. A lot of Ryan's work ethic, he would say, came from his dad. And so when Ryan launched Chewy, instead of going to college, his father was a huge sounding board for him, and it was really a point of bonding for them.
I think I've known early on that I wanted to run my own show and build my own business.
Chewy is everything to understanding Ryan Cohen. It's an e-commerce company that sells everything from 35-pound bags of dog food to collars and chew toys. Blake Day is the co-founder. They met in high school in a chat room, and that's how they connected. He and Blake Day were going to actually start an online jewelry company and decided to switch gears.
I was shopping one day for Tylee, my teacup poodle, and I realized this was a category that I was much more passionate about. Within a few weeks, we were selling pet product online, and the rest is history.
I knew it was called MrChewy.com, and every time that you told people where you were working, they were like, is it the granola bar? Like, is that what you... And I'm like, no, it's pet food. You know, the one thing I forgot was treats. Queso. So I started at Chewy in 2013. I was just about to graduate from Penn State, and it happened that a family friend worked in a warehouse, and he said, hey, look, your son should contact this company. They're growing really quickly. They're still very small. Next thing you know, I'm in Harrisburg, Pennsylvania in a warehouse. There's just these pallets of dog food, cat food, you know, you name it. There's pet supplies everywhere. I just had this gut feeling that it was going to be something huge.
I met with Ryan and Blake in our first meeting down in South Florida. Did I think I was sitting in the presence of a generational entrepreneur? Not yet, to be honest. I'm Larry Chang. I invest in emerging software and internet companies. I thought that it was very impressive how they had scaled. Everyone said, stay away from this category. Don't invest in it. It's not going to work.
People thought Chewy was the next Pets.com, and where was Pets.com? It was bankrupt.
Now that you can get whatever you want at Pets.com.
It was a victim of the dot-com bubble. But also the economics of a business like that were very difficult. I mean, you think about a 35-pound bag of dog food. What kind of margins are you going to make shipping 35 pounds of dog food in the mail to somebody?
What made Chewy possible is that consumers changed their purchasing habits. It's called the humanization of pets, which is we started to buy higher grade products, more meat-based products, more domestically sourced products, and the price of pet food has climbed over time. And so you can't ship a 25-pound bag of dog food that costs $70 economically.
He basically said to all the naysayers out there, you know, I know this has been tried before, but I think I can do it this time around.
Ryan was having a lot of trouble getting investors. He was knocking on doors, he was sending emails, he was just getting rejection after rejection after rejection.
The more I was told no, the more I was motivated to prove everyone who I felt was almost betting against me that they were wrong.
It was so critical for us to get that investment. There were times where I was convinced that I was going to walk into the office and there was going to be a sign on the door that said, "Go home for the day."
Ryan did a good job of not projecting that, and he negotiated quite effectively. We invested $15 million in Chewy's Series A round. We were the sole investor in that round.
That's what ended up allowing us to bring fulfillment in-house, allowed us to have control over the entire customer experience from start to finish.
He told me he read every single review every night. Ryan kind of threw all the conventional protocols out and said, let's just start with the answer. The answer is we need to have customers who love us.
So for Chewy, customer service is 24/7, 365. My birthday, your birthday, Christmas, it did not matter. You are there.
You know, it was okay to cry over the phone with a customer who had lost their pet. That's not an easy thing to go through.
Ryan would send handwritten thank you cards around the holidays to customers. The logic was, let's do everything we can to wow the customer, and we'll have them for life.
Typically, when you call a customer service line, you're tossed around to 6 or 7 different people. With Chewy, it was as simple as talking to one person, being like, hey, like my food didn't get here, and I need food for my dog, or I came and the bag is broken, or the box was damaged. We would then process a refund or process a replacement, thinking like, did a lot of refunds, and I'm like, how are we making money? We just keep giving people their money back.
Ryan recognized that. He said, I'm okay with losing money as long as we're growing. Because if we're growing, we can just keep reinvesting that capital into additional growth, into additional marketing. We can keep going out of our way for the customers.
One of the things we became famous for was sending portraits, paintings of pets if we got their picture.
I painted mostly dogs and cats for Chewy, but I've also painted horses, fish, reptiles, birds, hamsters. What else? Axolotl, I think. That's the weirdest one I've ever painted. Chewy reached out to me back in 2014. They had come across my website and sent me an email, and that's how we got started. I painted over 4,000 pet portraits for Chewy.
If you're someone who cares about your pet, then those things made a difference. And that is what really got Chewy stratospheric.
There's an aspect of Ryan, if you get to know him, which is utterly paranoid about competition. We didn't want to alert anyone, especially Amazon, that the company was doing so well. The PR strategy at Chewy was to not do PR. We wanted to stay below the radar until we had north of $1 billion in revenue.
It was just an incredible business. We built a machine. We built a machine.
Ultimately, when PetSmart reached out to us, Ryan essentially told them, you have to hit this price under these terms, and you have 30 days to do it. Otherwise, I'm not spending time on this. And I remember at that time thinking, Ryan, you probably just killed the deal, but that's okay.
Well, it could be the biggest e-commerce deal ever. PetSmart agreeing to buy Chewy.com.
So we sold the business for north of $3 billion, which was wildly successful.
When Chewy got sold to PetSmart, that put Ryan Cohen on the map.
It was like, oh my God, wow, like we really did make history with this.
So Ryan will not confirm this publicly, but many people say he took home $1 billion in cash from the deal. The $1 billion payday ended up being a pretty important turning point, I think, in his life.
Ryan worked every day, day and night. I'm literally saying he didn't take a break, and I think he needed a break.
It's a doggy!
latest high-profile IPO making its trading debut today. Online pet retailer Chewy coming public on the New York Stock Exchange.
On IPO day, that was a really cool experience.
I remember he called me and I think he said he had lived the American dream.
Ryan and I are standing there on the exchange floor, just kind of soaking it all in. And I was like, Ryan, you're the co-founder, you're the founder of this company. Like, you're the one they want to talk to.
Chewy's co-founder and former CEO who organized the sale to PetSmart in 2017, Ryan Cohen. So you're not a shareholder in Chewy.
No.
But I would imagine you have a lot of feelings about seeing this company that you built starting in 2011 go public today.
It's a very, very emotional day.
You sold for $3.3 and you got a $14 billion market cap today. Did you not sell for enough?
It felt like a fair deal to us at the time. It worked out.
If you wind back and you say to Ryan, would you have sold the company knowing everything that you know? Would you have made the same decision today? I suspect that that would be a hard question for him to answer.
What's Ryan Cohen focusing on? What's next?
Well, retirement, I would say, is overrated, so that has...
But he should be perfectly fine because he was a billionaire at that time, and he went on to do very interesting things with that $1 billion.
A wild day for GameStop. New high score, the stock jumping as high as $159 a share.
January 2021 will live in history as the month GameStop went nuts.
GameStop.
GameStop. GameStop.
GameStop.
GameStop.
GameStop.
On the network, we were just nonstop GameStop updates because it was jaw-dropping. It's whipping up that momentum, and Ryan Cohen was able to do that in spades.
He bought around 10% of the company. He added more to his position just last month.
You heard from cousins that you hadn't heard from in 50 years. Everybody was trying to get any information they could to validate and to substantiate why in the world is this stock going up and should I go ahead and get into it? My name is Shannon Phillips. I was at GameStop for 17 years. So GameStop in its prime was purely focused on hardcore gamers. We jokingly, internally referred to as we were in the crack house business. Because, I mean, we literally had, a store in every strip center. We would have midnight launch parties for big games.
1 minute left for the game to come out, just 1 minute.
I actually remember I saw this huge line and the cab driver goes, oh yeah, that's a GameStop. The Elder Scrolls just came out and my son's in that line right now.
Just 1 minute left. Woo!
I'm a research analyst. GameStop is one of the retailers that I cover. By 2013, the hard drives were over 1 terabyte and game files were maybe 50 gigabytes. So you could download 20 games to your hard drive, and consumers started downloading. And that was kind of the beginning of the end for GameStop.
The CEO changed several times. It just kind of spiraled from there.
So when Ryan Cohen arrived, this was a wounded company. I mean, this was a company that was really down and out. People didn't have much hope for this one.
Ryan himself, having built an e-commerce business, saw a great opportunity in the e-commerce space.
I think he saw the fundamentals of the business, the ability to generate cash, and he said, let's try and modernize this thing and see what happens.
Cohen, who owns nearly 10% of GameStop, said the company's business model is outdated.
He then, around November of 20, wrote a letter to the board, and that was disclosed, telling them that their strategy was flawed and that he had great ideas.
My favorite part was this all caps, italicized, underlined sentence that says something to the effect of GameStop's challenges stem from the intransigence of management. So basically he's saying you guys are all incompetent because you missed the boat on digital spending.
I could tell from the letter that, he didn't have access to all the internal data. So I wasn't as optimistic as some of the other coworkers. And again, one of those, first thoughts was, Ryan, this is a different market. You cannot digitally download dog food.
That company being pushed to conduct a strategic review by activist investor Ryan Cohen, the founder of Chewy. Cohen.
An activist investor is somebody who buys a stake in the company and agitates for change at that company. In this particular case, change was for moving away from bricks and mortar, for embracing e-commerce, making the business more efficient by shutting down stores.
Our firm represented Ryan in his active investment in GameStop. He's someone that's putting, his own capital at stake and basically putting his money where his mouth is.
To have someone make a significant investment in the company just necessarily suggests that someone believes that this company can be successful. My name's Mark Robinson. I'm the General Counsel and Corporate Secretary of GameStop. I think people welcomed and were excited about the idea of what Ryan could bring.
January 2021 was when Ryan Cohen was appointed to the board. Not just him and 2 Chewy colleagues.
And everything changed, really almost overnight.
There was one board member, and his view was, listen, be careful what you wish for here. You may not want this person on the board, and I was shocked to hear that.
My understanding, he was a little bit of a troublemaker in high school, a personality trait that seems to have carried into the boardroom.
He said in the past that he likes to deal with people who will, actually do things, not just collect paychecks. And so he really could not identify with any of these managers or board of directors. And I think people saw that he meant business, and that if he could apply just some of that Chewy magic to GameStop, that could mean a big difference in the stock.
GameStop up another 20% after a near 60% surge yesterday. At one point...
At the same time, folks on Reddit started posting about how they thought GameStop might be severely undervalued, and all bought a ton of GameStop, and they sent the price skyrocketing.
What the heck is going on with GameStop?
390% gains on a year-to-date basis. GameStop shares creating more than $3 billion in wealth.
One of the craziest things that I've covered is the meme stock phenomenon. I don't know if there's a real definition for meme stock, but this is the way I view a meme stock. A stock that, by conventional fundamental analysis, doesn't have many growth prospects. And for some reason, the Reddit community gets a hold of this and believes somehow that they can turn that stock around just by momentum of them being in it.
FOMO, fear of missing out, is what drives meme stocks higher.
Ryan Cohen is the poster child for the meme stock phenomenon. He is the meme stock king because of his role at GameStop.
So Ryan's in uncharted territory as a deeply operational activist investor who also sort of is that first generation of having harnessed the power of social community paired together.
I think he capitalized on that as an opportunity. I think he kind of viewed that as his debut, really as kind of more of an activist investor versus just, an ex-CEO.
Ryan became chairman of GameStop in June of 2021. And not surprisingly, the reaction was extremely positive.
We had an in-person meeting. We tried to get the news out that Ryan would not be there. We had individuals coming in bass boats and were drinking at 8 in the morning, waiting to get into our shareholder meeting. It was something I won't forget. Before 2021, we would typically have 2 to 3 shareholders show up at the meeting. I believe that our attendance was over 400 that day.
These people tend to believe that Ryan Cohen is the savior of the little guy.
He is the god figure of the meme stock community.
His followers refer to him as Papa Cohen.
He's very much become this sort of messiah figure.
Why did Ryan become the face of the meme stock phenomenon? You would have to ask the people on Reddit who made him that.
I invested in GME because I saw the craze that was happening. It was all over Reddit at the time.
The meme stock crowd, the Reddit crowd, basically said we're gonna all work together to buy the stock and thereby drive the price up.
The price went from the single digits to hitting the high 400s at some point. And my understanding was that part of that was driven by news that Ryan Cohen had taken a stake in GameStop and had joined its board.
This movement loves hanging on to a figurehead. And I think he was the figurehead. He was sort of the anti-Wall Street.
Knowing Ryan, it is actually a good choice. He is challenging convention. He will buck traditional wisdom. He will go after giants.
It felt like we were all trying to fight the big corporate greed. My name is Brandon. I've been on Reddit, I believe, for 6 years. I did not know what I was doing when I started investing. Ryan Cohen, I had started to learn about him through the GameStop communities, and I started buying more GameStop because I liked what I had heard. He was a regular guy that became a billionaire. Well, why can't I do that too?
He was supposed to be this great businessman who would make GameStop very profitable.
He came across that he was on the side of retail investors.
I think at the core of the GameStop movement, it was basically stick it to the man.
When I was originally a part of these communities, that was a big part of the sentiment. It wasn't just a bunch of people trying to get rich, and that's how I felt at the time.
They make a lot of memes about Ryan Cohen. My name is Evan, and I've been on Reddit for over 10 years. They love to have him as God, as the Messiah.
He's played this role of being a central actor in the meme stock world.
Basically, any kind of meme that shows him as the good guy.
People are creating these memes. They're looking for a story to tell. They're looking for something to direct investors' attention to.
People who don't necessarily have a hero or an inspiration, I think he's just kind of paradoxical in that he's a regular guy who's super successful, who's turned the tables, and people want to be a part of that.
There's a sense in which people were attached to him in a way that defies sort of ordinary investing logic.
Here's a pretty typical post talking about how Ryan Cohen is going to lead you to the promised land.
He's developed very much a cult following on Reddit. In their eyes, he can do no wrong.
His followers have concluded that he's a genius and they're going to keep the stock propped up at a very high price.
Buckle up, let's go.
Ryan Cohen is a guy who likes to play it close to the vest. He might, put out the mandatory filing. He might do a cryptic tweet, but that's about it. What he's up to is anybody's guess.
His tweets are another example of the ways in which retail investors are looking at what I would say are non-traditional forms of information to make their investment decisions.
Welcome to GMEDD's interview with the one, the only Ryan Cohen.
Ryan Cohen did an interview with a group called GMEDD.com.
So GameStop due diligence. And I think that he went there because it was a friendly audience.
What's up with this one?
They actually went through all these tweets, and the guy asked him, what do these mean?
February 22nd, 2022, a pair of shorts.
What do you think?
Has to be about short selling.
He would post all sorts of vague nonsense, really, and all of these people thought that he was talking to them in code.
I see the crazy conspiracy theories, so I'll kind of go through Reddit and I'll go through Twitter. I'm like, oh, they think this is going to happen.
They think their deity is communicating with them, telling them not to give up the fight, and that one day they will still be billionaires because he is on their side.
They concoct this broad, wide-ranging plan that he has when it's not clear that those plans always exist.
He posted a GIF from the movie Ted, and it was the teddy bear, taking a bong hit. The stock went straight up on that. Like, what was that? He showed a soft serve ice cream from McDonald's, and the stock went straight up. So I'll give him credit that he's a meme master.
Ryan and I are both on Twitter. We're very different on Twitter. I've talked to Ryan about how people look at our tweets, and I think we wish people wouldn't scrutinize them. We'd rather people just take the tweets at face value and not impute some sort of ulterior meaning in any of them.
It doesn't seem like it really matters what he says. It seems like the people that are his diehard followers are going to think that, he's always talking in code and always trying to communicate with them.
I think social media feeds a conversation. Things go viral, and that's just as true of investing ideas as it is of any other theory. The difference with investing is that real money is at stake, and maybe an individual's livelihood is at stake.
This shows how sad the whole thing can be. It shows someone a month ago talking about how much they're investing, and then 8 days ago they're asking if anyone has $5 so they can buy ramen noodles. This is someone who needs to be selling those shares just to survive, but they won't because they believe they'll become a billionaire.
People said we will not sell our shares if the price won't look like a phone number. They basically went all in to the point of catastrophe for many.
I'm just scrolling Reddit posts right now. A lot of these people who are posting saying they're willing to hold for the rest of their lives. I'm pretty sure at this point they want to give RC their paychecks directly. No matter what he does, these guys follow him and they turn anything he does into bullish sentiment.
I originally would bet for Ryan Cohen because I believed he was a man of the people and was going to take these companies somewhere. My feelings about all this started to change when Ryan Cohen, in my opinion, rug pulled Bed Bath & Beyond.
We turn now to the end of an era, another popular retailer going out of business, Bed Bath & Beyond.
Closing sales will kick off today. That's going to impact more than 300 stores.
This is a good store. We're all going to miss it.
Everybody knows Bed Bath & Beyond. It's the company that sends you a 20% off coupon every month. It sells everything from bed sheets, pots and pans, blenders, hence the name Bed Bath & Beyond.
The story of Bed Bath & Beyond is very much the story of American retailer. It got big, 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 and then all of a sudden e-commerce came and changed the game entirely, and it couldn't pivot or respond fast enough.
You gotta watch what's happening. I don't even know how to describe it. Shares of Bed Bath & Beyond are up 74%.
To infinity and beyond. Bed Bath shares soaring as a big name takes a stake.
In March of 2022, Ryan Cohen disclosed a substantial stake in Bed Bath & Beyond.
When it happened, I thought, oh, here Ryan goes again. He's picking the most challenged retail companies and seeking to create change.
He's calling for Bed Bath & Beyond to update its turnaround plan and explore a sale or spinoff of its Bye Bye Baby business.
It was this notion that Ryan Cohen was going to go back into another company and try to turn it around, that this guy with a magic touch, this guy who had legions of retail investors following his every move would go in. That really ignited the stock.
They bought into the belief that this was going to skyrocket, they'll become rich.
Bed Bath & Beyond has reached a settlement with investor Ryan Cohen. 3 new directors will be appointed to Bed Bath's board.
And he pushed for changes. The problem is the business itself at Bed Bath was just struggling. While at GameStop, I think Ryan found himself a little bit more time in kind of committing with a turnaround plan. He didn't have that luxury at Bed Bath.
Bed Bath & Beyond getting hammered after the retailer posted a big, unexpected quarterly loss.
In August of 2022, that's when the story gets really, really interesting.
The stock was extremely volatile, and for some reason it went down and back up.
And I just had a feeling that something was going to happen with it, so I bought into it at around 5. Then in August, it started to climb.
Also want to draw your attention to Bed Bath & Beyond. There was a filing out yesterday.
Ryan made these filings in part because the share count of the company changed.
Because Bed Bath & Beyond had bought back stock, Ryan's stake in the retailer went from 9.8% to more than 10.
So in those cases, when your stake changes in a company, you have to refile to the SEC. What was interesting about this filing was that basically there was not much new information, but it did put back out there his position of these far out of the money calls. Call options are basically a bet that the stock is going to go higher to a certain price by a certain date.
Traders who maybe hadn't been paying attention the first time around or didn't really know what those filings meant saw that, and they got incredibly excited. And they said, oh my God, Ryan Cohen thinks the shares at Bed Bath & Beyond are going to quadruple? So do I. And they dove in.
Check out shares of Bed Bath & Beyond rallying as much as 70%.
To me, this feels like a big fugazi, as the kids say.
It's real. I mean,
but yeah, exactly.
I hear what you're saying.
We were trying to figure things out in real time. You're looking through it, you're comparing it with past filings, and that's when we realized that there was not really much new information in that amended filing. It was sort of a race to just try and figure this out because we were seeing the stock run. And so we wanted to find some answers. And what we later learned a couple days later in another filing is that Ryan Cohen sold his entire stake, every share.
That's not something small. We're talking over $140 million. That is a non-trivial amount of volume to get sold. I was not paying attention to Bed Bath & Beyond at all until his trades came through. A trade of that size, it's only natural that that sort of raise red flags.
Shares getting crushed right now, down 40%.
Such a gut punch, but what you saw was like all these people were just left with shares that had just crashed.
Ryan Cohen's investment in Bed Bath & Beyond probably lost a lot of retail traders' money, but it turned out very well for him. He walked away with around $60 million in cash in his pocket. And that's not because he turned the business around or because he brought some clear change. It's because retail traders followed him in and then he sold out. And that raised questions.
All I can say is that once Ryan became aware of the obligation to make the filing, he made the filing, and I think that at the time he had not decided whether he was going to increase his position or decrease his position.
I think it's a good example, though, like if Ryan enters a situation and can't influence or make the changes that he would want, he didn't stay in it. I think people have to appreciate that that's always a possibility.
So in the days after we learned that Cohen dumped his entire stake, we also learned that the company was going to go through this massive restructuring.
And then it came out that some suppliers weren't getting paid. 2 weeks after that, they announced horrible quarterly performance.
Bed Bath & Beyond announcing plans to lay off about 1/5 of its workforce and close about 150 stores.
It made people wonder what Ryan Cohen knew about the company and what it was planning to do when he sold that stake. Did he know that the company was going to go this route?
His fund basically placed 3 board members onto the board. It strains credulity to believe that the board members wouldn't be aware of what was going on at the firm. And so then you start to wonder, well, what's the connection between the board members and Ryan Cohen? And so not only did the trade show up on our radar screen because of the size of the trade, but also because it was made by an individual who was intimately connected with the company.
The directors that were actually inside the boardroom, they're not beholden to Ryan, they're independent directors, and Ryan had no influence or control over, the decisions that they would make.
We do have some sad news from over the weekend with Bed Bath & Beyond.
So the story took a really tragic turn. News that the CFO at Bed Bath & Beyond,
Police say 52-year-old Gustavo Arnal
plunged to his death from the Jenga building in Tribeca.
His death came just days after the struggling chain announced that it was closing stores and slashing jobs.
This is a guy who had been in business at Fortune 500 companies for a long time, long track record.
It was an incredibly stressful time for the companies, the employees, the board, executives, everyone.
And Bed Bath & Beyond stock taking another hit.
Is there a case for the SEC to look into here?
Oh, I definitely think so.
When you're investigating an activist investor, it's typically a very challenging investigation because you are trying to prove that there is an intent to manipulate the market by that person. So you see, there's a whole laundry list of potential securities violations that can happen in the context of being an activist investor. But as far as I could tell, what happened in Bed Bath & Beyond is one day he liked the company and the next day he didn't.
In my opinion, Ryan Cohen likely did not do anything illegal. But do we want to live in a world where retail investors look to these social media leaders and are heavily influenced by them? Or do we want to live in a world where regulators try to protect those retail investors?
But from a moral standpoint, it seems a little shady. The problem with Ryan Cohen is that people believe in him and believe he's there to support them, and then
Ryan Cohen saw dollar signs instead of doom. The e-commerce entrepreneur sought a total transformation of GameStop and found his way into the boardroom.
What can I tell you about where GameStop is heading? I can't tell you where GameStop is heading. It's not that I don't know, but I think that's best told by Ryan.
Ryan is the chairman of GameStop, and he runs the place like he owns it. He's used to operating as the guy in charge, and that's exactly what he's doing.
Ryan Cohen and the GameStop board, they haven't offered forward guidance at an earnings call for 2 years now. They're not really telling anyone what's going on with it.
On typical Wall Street calls, you've got the CFO coming on, talking about the results, taking questions from the analyst communities, really sort of inviting investors into the company. But here, they're operating behind a wall, not even a veil. It's more like a wall.
Now, ask yourself, why would GameStop do an earnings call and not take questions? And the answer is because Ryan Cohen doesn't want anybody challenging him.
When Ryan came in, whether it's trust issues or whether or not he just wanted to, recreate the old good times we had with Chewy, he went out and grabbed all those employees and brought them in.
He thinks that his views are right. He has his people that he trusts. But other than that, he's not going to try to appease anyone.
The impression that we got was, okay, if you're pre-Ryan Cohen, you're a complete idiot. If there had just been one smart person in the company, that person would have ascended to the top and would have ran the company, and the stock would have never been worth $4.
Turning around any company is not like flipping a switch. It's like moving a large ship that's got tremendous momentum and trying to shift it into a different direction. It takes time, and those efforts are happening.
One of the first things that I noticed when I joined GameStop was that we were opening up new warehouses, and they were big warehouses. It was kind of taking from the same playbook that Chewy had, where the goal was to build this e-commerce distribution network.
The company announcing it's leased a 530,000 square foot fulfillment center in Reno, Nevada, and also leasing a customer care center in.
He was really aggressive about making changes to the way that the e-commerce business operates and where it operates.
Why are we opening up additional warehouses? We have 5.6 million square feet of store footprint for us to have our product close to customers and for them to be able to buy it in any way that they want.
Well, initially, Ryan's agenda was to get rid of a lot of the bricks and mortar store, streamline the company, make an e-commerce first company. And I think he tried to do that. Along the way, he tried a lot of sort of out of the box things.
The NFT marketplace idea, I don't think that GameStop has any competitive advantage in that, zero. I don't think he has any ideas that are fresh and new and different that will allow GameStop to thrive.
I think the passage of time will see who's right. The critic who probably hasn't put up their own money is not an investor in GameStop. It just is just that, just a critic. It's so much harder to be an author, and that's what Ryan is.
I think if Ryan's goal was to make this an e-commerce company, the plan didn't work. It's today still primarily a bricks and mortar company. It's not much different from the company he originally inherited, minus the fact that all the management changed and the board changed.
I think the results speak for themselves, honestly. We just had our first profitable quarter in some time.
GameStop shares are soaring. The company reported a quarterly profit for the first time in 2 years.
We have a ton of cash on the balance sheet. I think the board is working well.
It cut costs. It shut stores. It became profitable that way. Revenues went down, so their sales were down. So yes, it was profitable, but how it gets to profitability is very important too.
I think that Ryan's biggest doubters absolutely question whether or not he is a one-hit wonder, and that will be the big question for Ryan, whether or not he can identify himself as a real investor with a clear vision how to run and turn around a company.
What is Wall Street buzzing about today? Activist investor Ryan Cohen and his latest target, Nordstrom.
I don't think he's a one-hit wonder. I don't think he's failed in any way. I think he's just taking risks.
What is Wall Street buzzing about? Ryan Cohen's latest target.
Ryan's popularity, particularly with retail investors, it's created some strange phenomena, that we don't see elsewhere.
Shares of Nordstrom surging more than 20% today, and this is as activist investor and meme stock master Ryan Cohen secures a, quote, sizable stake in the company.
The stock popped in after hours trading, just on a Wall Street Journal report that Ryan was involved in the stock.
I think Ryan is grappling with who he is. Is he an activist investor? Is he an entrepreneur? of those categories, what ilk is he?
Alibaba on the move after news that activist investor Ryan Cohen has built a stake in the Chinese tech giant.
The stake was worth hundreds of millions of dollars at a company with a $300 billion market cap.
Alibaba is a massive company, and Ryan had a small stake.
Cohen is pushing for the company to boost its share repurchase program, according.
Nobody takes on a Chinese company because the Chinese government plays a role there. So people were scratching their heads. What does Ryan Cohen think he can accomplish here?
We haven't seen people like Ryan really articulate a thesis for what they're doing.
You see Ryan really kind of taking a page from the Elon Musk playbook of like, oh, Twitter is a pretty powerful weapon. My tweets can move shares. Why don't I use that tool now that I have it?
Regulators, prosecutors, enforcement, like we're all in the dark. Scholars, like we are learning ourselves. We're watching the market evolve. Do your job. We need people to say, these are the rules and these are what the rules should be.
The real danger here is that when you follow an activist investor is when they change their minds, you're going to be left with nothing because everybody's going to run away from that. That kind of risk is not a risk that I'd be willing to take if I were an investor, or certainly the SEC would not recommend that you take those kinds of risks.
I should have realized that this was all too good to be true. If I could speak to these meme stock Reddit communities, that you guys really need to be careful. If you don't trust the people on Wall Street, these billionaires, why are you trusting another billionaire that's not really seemingly being very forward?
I think that there is a want on Wall Street to think of the good guys and the bad guys. And I think that we don't know enough about Ryan Cohen to know where he fits in.
He has the capacity to be wildly successful if, in fact, the way you generate returns is by zigging when everyone else is zagging.
He is a strong force. He's getting companies to listen to him. You may want to think of him as a joke because he tweets inappropriate tweets, but he has people who are following him.
They will always remember Ryan Cohen as the guy who got GameStop above $400 a share. I mean, it's hard to forget that.
Regardless of what happens in the future, he has turned the markets upside down. He's done unprecedented things.
At every point in the journey of knowing Ryan, what normal people would do is not what he did.
The next big question, though, for Ryan Cohen is, when he does get involved as an activist, will he have success as an activist? Not just make money from his investment, but can he enact change?